All right, we're recording. Like I said, we're going to wait just a couple seconds. Give a few more people time to load in here before we get started. So I wanted to do this because, I kind of take it for granted that, everybody that's in the Telegram is familiar with TradingView and knows how to use it. So that's, I don't want to insult anyone's intelligence. But there's probably quite a few that don't know how to use it or are not familiar with it. So I am going to do this basic class. Now, I will say this. I'm not a techie. Like, I'm not a tech guru. Like, I don't build computers. I'm not geared that way. I keep a lot of the stuff that I do, including with TradingView, very simple. And one of the reasons for that is because for me, those of y'all that know 360 Trader, those of y'all that know and have been with me, you know that I am a pure price action volume trader. That's it. I'm known for not using indicators. And some of you out there are saying, well, you use volume, that's an indicator. Volume is actually not an indicator, it's a statistic. I don't care what TradingView calls it. It'll be under the indicators. But volume is a statistic. It's not an indicator. So everything that I do solely on price action in the candles, in what I see in the candles, and volume. I've been doing this for a very long time. I've spent countless wasted hours and time, in my early days chasing Holy Grail and trying this and trying that and throwing this indicator on there and then adding this indicator and then trying to come up with the perfect trading system based on indicators. And you can get lost in that. It's good. And there's a couple that might work for you a few times, and then you're gonna be like, I think I found it. And then all of a sudden you hit a massive 6-loss win streak, and those same indicators that you thought were going to be your holy grail end up destroying your portfolio. And then you'll come to the realization that loss prevention is key, money management is key, so on and so forth. So that's another story. But the worst thing you can do, in my opinion, is to just start slapping, dozens of indicators on your screen. All an indicator is it's a mathematical model of putting together what's already visible through price action and volume and any sort of combination of those. So for me, if you can learn to read and become a price action analyst, and you can learn to understand what is going on between the buyers and the sellers and the price and identifying, supply and demand, support and resistance, and understanding volume and the complexity of what volume is and being able to break that down and being able to speak to those things. You'll know when I do analysis on price action, I'm actually able to speak very clearly what is happening between buyers and sellers. And this action almost always occurs at supply and demand, which is another way of saying resistance and support. Supply is another way of saying resistance, and demand is another way of saying support. That's why, you'll hear me say, oh, this is coming into, a demand zone, and usually that's a support area. So those terms are also interchangeable. So if I'm saying supply and I'm saying demand, you should in your head be able to go, okay, this is an area of support, an area of resistance. Note I'm saying area. And that's another thing I want to talk about right now. Because I use lines, and I draw these lines myself. And this is another very important thing. Those of y'all have been with me, you know what I'm about to say. The lines, whether they're trend lines, whether they are support lines, or whether they are resistance lines, that means horizontal lines, whether they're diagonal, heck, even if you're using a moving average line, which I don't, these are areas. They're not precise data points. And a lot of times, you have that line and it is very precise. It's a very precise line. You need to understand and know that, it's an area. And the reason why that's so important is because, you'll see price penetrate that line often, a lot of times. And you're like, oh, the line isn't working. Well, that's not what that line is for. And it can create a lot of false signals for you if you are saying that this line, as soon as price breaks that line, you have a breakout. You might have a breakout, but you might not. So that's very important to understand. Lines are areas, and it's why many people, when they start out, I encourage them to instead, draw ranges, and I can show you how to do that in a minute when we get into TradingView. Instead of, drawing lines, straight lines, lines get you into also the mindset of thinking that you're going to imprison price. I have drawn this precise ascending pennant, and price will abide by this, and then it will do what it's supposed to do. And when you draw these patterns and when you draw these lines, you are not attempting to imprison price. All you're doing is giving yourself an opportunity to use those areas to watch the battle between buyers and sellers in accordance with volume and see what's happening at those areas. As you know, there isn't a single pattern that works out 100% of the time. Very few even work out 80% of the time. There's a lot more that goes into it than just saying, I have an ascending pennant. That's a bull pennant. This bad boy's going up. How many times have I posted, ascending pennants, descending pennants, and shown you them break the other way? Many. So, as rookies come in and they think they see that and they're like, I've got a sure thing. And you're never drawing anything to think that you are going to imprison or you're going to capture price and you have the Holy Grail and everything's going to go your way. There's many other things that come into play there. And one of the big ones and the major one is your money management and making sure that your risk is appropriate with the amount of cash that you're investing, the amount of available capital that you have, and on the totality of the market. For example, me posting a trade this morning, on an altcoin. Let's just break down that concept. We already know Bitcoin could very easily pull back to that 25 area and challenge that bear market old resistance as support. So I have that risk assessed when I make this other trade, when I make this long trade. I've already assessed that. And it's something that tells me, hey, why, although this altcoin looks good, has volume, is pushing up, why could that fail? Well, because Bitcoin is currently in a precarious position where it can go and seek lower prices. So, I did post on there, hey, this is a higher risk trade. These are the reasons. And this is one of the reasons. Bitcoin could continue south, head south, and back down to that 25K area that we've discussed over and over and over, and we have a hedge short for it. You literally have a hedge short in play right now. So you can see I've plugged these holes, and I've done a lot. It's not just about, any singular move. So all of those complexities have to be taken into account when you're charting, when you're looking at price action, when you're looking at volume, and so on and so forth. But the key and the most important thing, of course, is proper money management and your risk assessment. Your risk assessment is not going to be the same as mine. If your starting capital is 1,000, well, you can't afford very much risk because you can, pretty much destroy that 1,000 very quickly if things move against you and you haven't, you don't have, so you don't want to be playing higher risk trades with that money. But, if you have 25K, 10K, 15K, 25K, whatever, you're able to, risk less on a trade or per trade and keep cash, on the table. You can possibly, or you can even hedge, you can take some long positions and you can play that short hedge to prevent and give you your money back if you got stopped out of your long. So there's a lot that goes into this. And we're not all on the same risk level. Everyone has a different one. And again, that's based on your own psychology. I'm an extremely calm person. You'll see me go boom and yay and all that stuff, but I do all that from a very calm place. When I look at the market, whether it's going up and down, I'm extremely calm about it. I don't get riled up. Even if I act it or say boom or say these exclamatory, is that even a word? Exclamation type words, I still have a measure of calm. One. So understanding your own anxiety levels, your own calmness, your own psychology, that's part of your risk package. The other main theme in your risk package is how much available capital you're trading with. That's going to ascertain your risk level as well. And then your experience level comes into play. Are you new? Those type of things. So all of that has to be taken into account, and everybody's different in that regard. I know some of you are here in the trading alerts, and you're only playing the Grand Slams because you don't like risk at all. So you're playing those Grand Slams, and you're going to be riding the next true bull market run, which, as all of you know, I do not, as of right now, do not believe that we are actually in that. We're currently in what I believe to be the pre-Litecoin halving mini bull run. Which I've broken down for you guys over and over. I literally have done it like 3 different times in talking about that. And we have 2 previous cycles that have had those before returning and testing bear market structure areas. So you guys should all already be on that sheet of music, already understand what we've been looking at for that. The Litecoin halving is in August. In the previous 2 cycles, the mini bull market run has ended either a month prior to, meaning July for us, or a month and a half to 2 months prior to, meaning June. So I'm looking for the mini bull market run to end sometime in June or July, pre-Litecoin halving. It's buy the rumor, sell the news. So a lot of times you have these events and people expect these things to run after they have. The only thing that actually does that is Bitcoin. But in both previous halvings for Litecoin, it has seen a, last cycle was a 600% run. And then it reversed, a month to 2 months prior. And went down and tested bear market structure lows. For me, the bear market structure low is now 25K because we have broken that resistance area. So in my opinion, if we do get that reversal after we have a Litecoin run into June and July with targets, as I've told you, around that 40K, possibly even higher, 40 to 45K for Bitcoin, then I would estimate that the market does come back down pretty close to the 25K area before we actually do get our real bull market moving on into the latter half of the year, into Bitcoin's happening, which is April of next year. I have a lot of drainage, of 2024. And then seeing that run on throughout the year with, logically and looking at previous cycles, probably that ending in November, December timeframe. So again, there's a lot to be seen. Bitcoin still has a lot to prove, a lot to do. There's a lot still on the table, but time-wise and Litecoin halvening-wise and Bitcoin halvening-wise, it fits the bill. So enough of me jibber-jabbering. Let's go ahead and share screen and do our basic TradingView training. All right. There we go. All right, so hopefully by now everyone has accounts set up. Hopefully everybody now has these accounts set up. Once you log in, and you can start off with the free one. Those of y'all that use a lot of indicators, you're going to have to upgrade, or that want more advanced features, you will have to upgrade. You probably won't need to go up above the next level. But just start with the free one. If it works for you and does everything you need it to do, just stay there. There's no reason to do anything more. But you're going to come into your screen. The first thing I do is open up my top right up here. At the very top right, you can see my cursor up here. Open that up. I'll have a stacked watch list. You may not have any yet. So my list is there, and we'll talk about that in just a minute. And then, or you can enter a chart into the main area. Once you get that chart, you're going to want to click See on Supercharts. So that's right here. Right here. See on Supercharts. You just click on that bad boy. All right. There we go. My computer's a little laggy right now. I have a lot of programs running. So this is very familiar right here. Let me grab an arrow so I can kind of point to things as we do them. And let's actually clean the screen. I want to go with, so I can kind of walk you guys through this on another chart. All right, good. We're going to use Cardano. All right, we're going to start over here on the right side. No, let's start on the left with the basic information. Top left, my arrow is going to stop in the chart, so you'll just have to watch my cursor. If your own little icon should be in the top left, whatever you set your photo as. If you click on that, you can go to dark mode like that. It's that simple. So it's right in your little icon logo, dark mode. Look, it looks cool. I know it looks cool, but let me explain my mindset, all right? I don't like it. I don't like it. That's my personal preference, man. If you like dark mode, go ahead and go for it. But there's enough sinister things in crypto that keep me from using dark mode. You know, it's about mood. It's about It's about your psychology. You know, for me, dark mode, this just doesn't lend itself to happy thoughts. Plus, I just don't like it. It's like Halloween over here. But I did want to show that to you because some of y'all are dorks and you just want to operate in dark mode. Yeah, not me. I'm a KISS guy, man. Keep it simple. Give me the white, pure, beautiful white. I just like the way stuff shows up on it, type of a deal. But I did want to show that to you. And that, again, is in your little icon, whatever you've set as your image. To the left here is your pairing. Excuse me. To the right of that is your pairing. And here we have ADA USD, Cardano USD. And you can click on that. And because that's already there, it will show you just for Cardano every USD pairing that exists. And on the right, this is a very important piece of this, is the actual exchange that it's on. So we're going to talk about that for just a minute. We're going to talk about that for just a minute because it's very important. If you pick a unknown exchange or some tiny exchange, it's not going to be good for your trading analysis. Why? The reason is because you want to go to the exchanges that have most of the trading volume for that pairing. So, you know, if you go to some random tiny exchange, the volume's going to be, it's not going to be truthful. It's going to be tiny. You want to go to where all the action is, you know, and that used to be, right now it's like Coinbase, you know, Kraken, KuCoin. That's going to give you a better depiction of true volume. Why? Because there's a lot of players. You want to go where that item is heavily traded. Do you understand that? I cannot stress that enough. You know, most people are spending their time messing around with the indicators, trying to follow it. But if you don't have true information on volume, then you're wasting your time. You're just wasting your time. I'm going to make this smaller because for some reason it doesn't look like, yeah, now it looks like it might show up better for y'all. I'm going to make the screen smaller because as I'm looking at it there we go. As I'm looking at the video that's being played, it doesn't look very clear. So I made that smaller. Hopefully you can see that better now. I'm going to go back up here at the ad screen again. That's that plus. That's ad if you want to compare. If you just click on the ADA. So I have ADA USD up here. You just click on that. Yeah, now it looks a little bit clear. You can see now over here on the right, Bitstamp, Bittrex, Poloniex. It used to be FTX was a good one, but we know that is no longer the truth. That's gone. But you've got Coinbase, Binance, Kraken. For me, KuCoin. If you stick with those relatively for almost everything, you know, you're going to do good. You're going to do pretty good as far as your pairings go and getting true volume information. So I did want to stress that, you know, that importance to you. Make sure you're doing that. That way you're getting true volume. All right. To the right of that, you have, I have basically everything in candle structure, Japanese candle structure. So that's actually right here where you can pick whether you want a line chart. That's a line chart. And it's just connecting closes. You can have it connect just the opens. Right now, this shows, I don't use any of that. All right. You can have bar charts. But for me, it's candles, Japanese candles, red and green. Very simple. That's what I use. So that's this little area right here. To the left of that will give you your time. So right now I have a daily chart up. That means every one of these candles here represents an entire day of price action. I'm not really using this training session to teach you how to read Japanese candles. That's not what I want to do. I'm trying to teach you how to use TradingView. So this is how you change that. Where do you want to be, and what do I use? Well, I use the daily. When I want my long-term views and I want to see, years, I will go to monthly, 1 month charts to get a long-term range view. So I'll use monthly a lot. Daily, I love the 4-hour charts. I will use 4-hour charts a lot. I will use, let me get this arrow back, which is now huge. I will use the hourly a lot. There's your hourly breakdown. And then you guys, 99.9% of you need to stay off of these. All right, these are the minute charts. When do I use them? I will use them if I want to see a precise activity at precise points looking at the hourly. So if I really want to zoom in on that battle, usually there's almost no reason to go below the 15-minute chart. That's pretty much it. So 30-minute or a 15-minute. If you are scalping, and we don't do a lot of that, but if you are a scalper, you are, anybody on the 5-minute to 1 minute, you should have already proven or validated that you are a successful scalper. If you haven't done that, you're going to get your butt hammered. Plus, if you are looking at the 5-minute and the 1 minute, you're going to have headaches, major emotional swings, and you're going to drive yourself crazy. It's just completely unnecessary. Even on the 15-minute chart, it can cause you to be very emotional. So the only times I'm on the 15-minute chart, as I said, is if I'm really trying to get short-term information at a precise point of supply and demand that I really want to just watch for my personal reference. But I rarely do that. There's almost nothing that you can't get as a swing trader or a short-term trader off the hourly. That's not gonna help you out. So for most of you, the hourly is as low as you need to go. And I love the 4-hour chart. I love the 4-hour chart. That's pretty much it. Hourly, 4-hour, and then the daily. So yeah, 99.9% of you don't need more than that. So that's that area right here. You really don't need to be messing with this. That's your candles. Once you have that set, you're pretty much good. Now, this guy. This right here is responsible for the destruction, the demise. Let me move my pointer up to it. Yep, it's at the top. Indicators. This is responsible for the destruction of more portfolios than I can imagine, because you're going to get in here and you're going to start just throwing all kinds of dookie on your chart. Man, there's even dookie in here that'll label your chart with buy and sell. The word buy and sell. And you're going to think, oh, look, it even tells me when to buy and sell. And you're going to get your butt hammered. You're going to get I'm telling you right now, you're going to get absolutely destroyed. One, because most people go in here and they start slapping stuff up on their chart, and they can't tell you how it's made and what it really is telling you. The reason why they can't do that is because they can't read price action. Most people don't know how to read candlesticks. They don't know how to read price action. They don't understand market structure. Simple, basic things like market structure, supply and demand, support and resistance. You shouldn't be touching none of that if you can't read price action. The only thing in here that you need, and look, indicators, you can have your favorites, all your favorite indicators in one spot. And I want to show you mine, to the right of it. Favorite indicators, there's my list. Everybody see that? That's my long list. And there's a gazillion in here. There's a gazillion. I mean, don't do it. Mine is volume, and so that is what is always on my chart, and that is what is represented down here. So let me get rid of it. So by the way to get rid of your indicators, once you put them on here, they will post right here. So the volume bars are down here, but the metrics of it is posted right here. See, it says volume, Cardano. So if I want to get rid of that, I can come up here with my cursor and I can hit X. Watch the bottom when I hit the X. Watch the bottom of the chart. Boom, they're gone. So volume is not down here. There is never a reason to not have volume on your chart. So again, I'm going to go back up here to indicators, click on volume, and there it is again. Bang, beautiful. So that's what I use, okay? You can go in here, indicators, man, and you can type, you can type all kinds of things in here. And you're going to get a gazillion things. MACD. Look, that is a MACD list. And how many people are using it? A bunch of garbage. Why? Because most people can't even read price action and they're trying to slap all this stuff in there. I do. You guys already know me. I'm known as a 360 trader not to use only price action, volume, and what we all have been designated as my arbitrary lines, which by the way, those lines are not indicators. All of those lines are that I draw, and I'm going to teach you how to put them up there. All of those are for us, so visually, because I'm an old man, I can identify things lightning fast and in a hurry without having to be like, all right, let me see this chart here. Okay, that's about there. The lines just give me information of areas to look at so that I can see the battle between the bulls and the bears, combine that knowledge with volume to make decisions. It's that simple. It's that simple. So continuing across the right, you've got you can create alerts. So you can click on that. If you want to create alerts, it's very easy, very simple. You would have your item in there, add a USD, and then you want to identify, do you want to be alerted when price crosses up above an area? So crossing up, you just enter the price, and the price entered right here. And then only once, set the name of it. You can say Cardano alert, and then you can go to your notifications here and indicate how you want to be alerted. You can even hit send an email to SMS. Otherwise, you can do it from your app. It'll give you an app notification on your phone when that price hits. Like you have my trades, and you're like, you want to know when that triggers because you didn't post that trade, but you just want to know, or you just want to know if Bitcoin hits something during the day. You can set that all through here. It's very simple, right here on this alert at the very top. So this is very user friendly. You can even set when you want that to expire, that alert. And it'll notify you through your app or to your phone or to your email, whatever you want. I don't do that a lot because I am the 360. I'm constantly checking. Whether it's on my phone, I always have TradingView open on my phone. Everywhere I go, I'm 9 times out of 10, I'm always checking. If I'm asleep, it's not like I want it to alert me. I usually have an execution already entered in the system. So that's very simple. This is very important. You have just jacked up your chart and you want to undo stuff. Everybody loves the undo button. So that's this right here. Everybody loves it right here to the left. You can even redo. Once you start putting stuff in on your chart, you can redo. Undo, redo. It's that simple. So if I draw a line, draw some hocus pocus, I just start putting this, I'm just throwing stuff up. You know, you guys get how this works. If you're familiar with Word or whatever the case might be, you just boom, undo, undo, undo. You get it. You get it. Simple. Let's do bottom left. This is where you get your cursor. I usually use just the cross. You can see the cross, the crosshairs. I usually use that. And then you can grab your chart by left clicking. All right, so grab your chart by left clicking. I can move my chart around. You have to hold the left clicker down. So I'm holding the left clicker down on my mouse and I'm moving it left and right. All right. So the right side, here's the price. So I can expand that by left clicking in that area, same as I would, and go up or down, up or down. So you can increase that size a little bit. And then the bottom is your time frame. You can expand that by coming down here, left clicking. So you come down to the bottom in this area, left click, and hold it down, and you can open that up. So that's how you move your charts around. On here, I can move it around like this. I can scroll. I can enlarge my window by just same stuff you would do in Word. I mean, it's very simple, but a lot of people don't get it. And then the right, up or down, left, side to side. That's how you basically move it. It's not rocket science. It's pretty easy to do. So with that being said, let's go ahead and move that into the next item. This is one I use all the time because I draw my own lines. And that's this tool right here. So the first one is trend line, and it's freehand. So you just click on it, then you left click, and then you can just draw it. Once you have it drawn, you left click again, it releases it. Now, I can move that. So I can move this wherever I want. Then grab this side, I can shorten it. It's basically just manipulating and moving that all over. And you can expand it, enlarge it. And like I said, I do all my own artwork. So there's a quick one right there. We just kind of threw up real fast as an example. Now, for short-term horizontal lines, you can do the same. So let's just say I want to do this area right here. And because I don't want a horizontal line going all the way across my screen, then I still use the trend line for that. And then, you know, you can manipulate, you can move that up, you can move it wherever you want. But for a short-term line, I don't use the horizontal, and I'm going to show you what I'm talking about. If you click on this again, I do use these a lot, these horizontal lines. But once you slap the horizontal line up, it's going to cut all the way across your chart. So you'll see them on my charts, but you know, if it's just a small area, just use your trend line to draw your horizontals. So a longer one, bam, I want it to go all the way across my screen. And there you go. So now you can see how this comes into play oftentimes comes into play. You've got it as support here, resistance here, and then back into resistance way over here over a very long time span. So these each line, everything you put on there, every tool you put on there, you can dictate those colors and stuff. So I'm going to move this over so you can see it. So my trend lines. So I've selected it by clicking on it. You can see the circle here and the circle here. So I have now selected it. So this is my control for that. So right here is how I change the color. I mean, you do you, you know, you do you. Supports, obviously, sometimes I use red. Resistance, you can do green. I do targets in green. I don't care what you do, come up with your own system. And then you can also change the thickness. So a lot of times for major levels, I'll use thick lines. So I'll go to the thickest. Why? Because it's major. You know, for minor, you know, you can say I'll use a 2. So I've got a thin one. You can see how I'm selecting, I'm changing back and forth between these areas. And I'm literally messing with it. I don't do, for your line, you can do dashed. I don't do a lot of that. Dotted, I don't do a lot of that. So I don't really mess with that a whole lot. But thickness is here, color is here, and then you can even change into, you know, I don't mess with this on my lines. I do this a lot for shaded areas and ranges, but not so much for my lines, but hey, you do what you want. So again, just by clicking on that, it'll bring this up. If I click on the chart, it takes it away because I'm on the chart. And I'm back to moving this around. But just by clicking on one of these lines that I've drawn, it will bring that tool up for you where you can play with it. And if you hate it, you can trash it. But that's pretty much all I mess with for the line areas. So you can go back in here. Vertical lines, I've only put those on like if I'm trying to establish a specific date for something. Like I've used these to show you guys where the halving points are, like Litecoin halving, Bitcoin halving. But as far as charting goes, I don't use it for TA. These are more to set dates. Why? Because it's going down to where your dates are. You know, this is where your dates, your times are. It's all the bottom part. So it would set that in stone for you. So if you really wanted to see that on a chart, then you could use your vertical line. You can color that as well. Very simple. Guys, I realize this is a very basic course, but a lot of people don't know how to use TradingView. So I'm just trying to show you. I stay away from almost all this, the rest of this. Parallel channels I have used, and I'll show you why. But you can do the same thing by not. So a lot of times I'll use just trend lines to set my channels. But you know, you can, let's draw one. So you click once to open it. You click, let me backtrack here. Let me backtrack. Hold on one second. So I can show you this cleanly. All right. Let's get some of this off of here. So let me start with drawing my own, and I do this a lot. I'm using the trend, just the trend line. All right. Just kind of drawing this little area right here. And there's, let's actually do this one. I think this will probably make a better channel for us. All right, we're just using this as an example. So there I've drawn my own channel. And then you can, you know, I'm being loose, so I'm not trying to be precise. Some of y'all are sitting there going, why isn't that line touching a candle or a wick? Well, I'm just demoing this. Y'all remember, their areas, don't get so bent out of shape. Okay, so that's an example of just drawing it with your trend lines. So let me come back into here. And, oh, still on the top. And let's grab that parallel channel. So you're going to left click to start it. And right click. And then look how, and then you just drag it down. Look at that. So now I have this pretty cool parallel channel that was drawn for me, kind of just with that parallel channel tool. And you can move it once it's drawn. You can adjust it. You can manipulate it, make it thicker. I mean, you can do all kinds of things with it. And you can also change everything, every aspect. Now, this is one of those times where you would probably want to change the opacity. I don't know. Opacity. Let's just go with that. That just sounds so weird. because if you're at full color, it's going to block out your price. So now's one of them times when you're going to mess with that down here at the bottom. You can change the color, all that stuff. If you want to change the border thickness there, now you have that border thickness, all that kind of stuff. So that is a tool that I do use. So again, back to the top. I use the trend line. The arrow, I use that to point to stuff for y'all, but I don't often use the small one as much as I do the thicker one, which I'm going to show you later. Most of you guys won't use this unless you're showing somebody something. A lot of times I'll use this at volume because of its thinness to show you, descending volume, stuff like that, because it doesn't block as much of the volume. But there's a bigger arrow, which I'll show you guys in a minute. So here I use the trend line to self-draw almost everything. I use the horizontal line. I don't use this crap. I don't use horizontal ray. Vertical line, I only use if I'm trying to show you a date. Parallel channel, I've already shown you. And I don't use any of this. So you can see how much of this I don't use. I'm a KISS guy, man. I keep it simple. Guess what? I don't use none of this. That's the second one down. I like to do my own work. Okay, I like to draw my own lines. I like to draw my own. I like to do the work because it forces me to do the study. It forces me to study the price action and so on and so forth. So I don't use none of that. This I do use. This is where you get that rectangle from. And again, it's kind of like that channel. And I'll draw that. But here I've got to mess with it to, once you get used to one tool change, you're going to understand them all. So this is a way to draw horizontal boxes, rectangular boxes, so on and so forth. Awesome, awesome, awesome tool. And I use this a lot to show you. So remember when I told you guys, I want to show you this. Rookies, instead of drawing these, I'm going to make this thicker. If you're a rookie, I'm going to give you some help, some technical analysis help. All right. I'm going to get rid of this and get rid of this. Watch this. Open this up so you can see it better. You're a rookie, so you're like, this has to be, I've got to find support, and it's got to be perfect. Well, do I connect this? But it broke here, and it broke here. Now let me move that down. It broke here. So you're trying to be all precise with this support. When the key is to understand, like I said before 1,000 times, your line is an area. I'm looking at this knowing that that is not a precise point, so I don't have to draw ranges. But if you're a rookie, because of wicking, because of false breakouts, because of these stop loss takeout movements, because of all of this type stuff, just convert to a range if you can't get it in your head that this is not a precise area. The way to do that is to, and I'm just going to draw it right over the top. Go to your rectangle. Start drawing areas. So you can be like, man, all right, well, here we got a pretty much a demand structure right here. Look how that works. This is a demand structure, and it's a range of it. Look at the wicks in here. I got that. This marks the bottom of that range. So just in capturing this in the form of a range, now you're seeing a little bit more of the price action truth. The truth, instead of being, it broke. Right here, it broke, it's going to go. Well, no, it didn't, because this is an area. This line still owned that price. Even though this broke that line, this line still owned it. And then look what happened to price. It came right off of it. So it kind of just gets you away from being so a perfectionist on your lines. Like I'll draw lines, have lines on charts, and people are like, and schools teach it, and they're like, all right, so on my trend lines and on my horizontal lines, do I connect candle bodies, or do I connect wicks? Do I connect the wicks of the candles? I mean, it's the stupidest argument in the history of charting, because you're basically revealing, you're trying to create a price point, and you're trying to imprison price, and you're trying to, you're just dumb. And they're like, well, you can, when you draw resistance or support, you only connect candle bodies and you ignore the wicks. I mean, ignore the wicks at your own peril, fool. It is valuable information. Valuable information. And so for me, when I draw lines, it's most touches. I don't give a frick if it is a candle body or a wick. It's almost always for me a combination. It's almost always a combination. Well, and I get, every time I post charts, I get, whoa, why over here did you connect the candle bodies, but here on the far end, you connected two candle bodies over here, but here you connected to a wick. Oh my gosh. I don't get it. Like, it's so dumb. It's dumb. Most touches, you're getting bent out of shape over a line. It's an area, and you're letting that precise line rule you, man. Go with most touches, and the reason why is because there's many other factors that are going to indicate what's going to happen at that level. And I'm aware of those things. It's volume. It's the battle between bulls and bears. It's what's going on in the overall market. It's all of these other factors. But you're trying to look at that line as if it's the Holy Grail. It's not. It's not the Holy Grail. So anyway, I digress. I'm trying to help you all out here. So I'm trying to teach you TradingView, but give you some extras. All right, so I do use the, we're back up here on the top left. Let me get rid of it. Click on it. You can get rid of anything also by hitting click and delete. All right, you don't have to go up here and undo. Circles I use when I'm trying to show y'all stuff. It's just click it, circle. You don't need it. Okay, you don't need it. You don't need it, but it's there. It's there. I don't use none of this. See, aren't you guys excited about this? The less crap that you need, the easier this is going to be. The less crap you need, the easier this is going to be. So let's go on to the next one. So the next one has my text. And you can throw things on there, man. Just click it on your thing and you can, hey guys, 360 is the best music. It actually printed it terrible. It just automatically printed terrible. I can't believe that. TradingView must be watching this right now and they manipulated that. I was literally typing, look, I put an E, it says terrible. What the heck is that garbage? Is the best music. All right, so you get the point. Here you can change the color of your text, the font, the 40 is as big as you can go, bold. This is stuff you can put on here if you want reminders or you want to give yourself information for the next time you come back. Like, this is good. I'm going to explain why. Eventually, you're going to, if you have as many charts that I do, and I'm going to tell you why I have as many charts as I do in a minute. But if you have as many charts as I have on here, and you're looking at hundreds and dozens of them, but you started drawing stuff because you saw something on the chart, and you're like, hey, oh, I like this, that, and the other. If you leave the chart and go to another chart, and you come back to it, and you're like, daggone it, you may forget, but if you type yourself a note, hey, moron, I like this volume into the apex of the triangle. Watch this, or something. Then when you come back to the chart, you go away, you come back to the chart, you have a note, and you go, yes, okay, yeah, I got this. That's one way to give yourself additional information if you have 1,000 charts like I have, to just give yourself a heads up. So I love text, and that's right here, text. I don't use this stuff. I don't do that. I'll show you what I do over there later. I don't use any of this. So I use the text. What else? Oh, my arrow and my lovely arrow. Bam. Arrow. Yeah, so I use this a lot to point to things or put things into perspective for you to pay attention to. Volume. I mean, I use this a lot for your guys' information. You can see what I'm talking about, look at key areas. But in there, that's pretty much it. Text and my arrow. If you want to play around with this stuff, feel free. Feel free to play around. I don't. This one right here, I don't use none of this. None of it. I don't use it. This one. All right. This one is how I show you guys my longs and how I put them up there. So again, let me undo that. In here, if you want to set your trades up like I have them, you come in here and you just click long, short right here, and just click on your chart. All right, just to get it out there, you're going to be able to manipulate it and mess with it. You'll already have your stuff drawn up on your chart. I don't have it on here right now because I'm showing you how to use this tool. And then you can manually move it kind of where you think you're going to put your stop. I'm going to come in here. See, I'm going to come below this low here. And you're going to already I just want to throw this up there. You're going to already have these drawn. And let's say that's your targets. Let's just draw one here. Yeah, so boom. So you're going to have that drawn there. You notice I use my horizontal line. And then you're basically going to be able to bring that down to that target. I'm going to open this up. Don't worry. I'll let y'all see it. All right. So I'm going to zoom in on this so you can see it clear. All right. So by clicking on this, let me move this bar out. All right. So by clicking on this, it's going to give you instant information. All right. And this is how I get those numbers for you. All right. First of all, to set these price points precisely, you've kind of dragged them, then you're going to double click on this. Boom. All right. Now I can mess with this. Entry price. It's right here between the red and the green. So if let's say it's on 0.369, but I want that to say 0.36, then right here, I'm going to make that say 0.36. I just drop that down to 0.36. Let's say that's where I wanted to enter this. Stop level, I dragged it to 0.334, but I want that to be 0.33 right here. Is your stop level, 0.33. You can make your adjustments. And then your profit level. Let's say I want to make that 0.42. I'm going to change that. Just enter that in right there. Now I have it perfectly set. Now, it's going to give you your information right here if you click on that. So if I click off of it, it's gone. If I zoom over it, it's there. Up at the top, I have my target and my percentage gain. And you may not be able to read this, but it says 16.67% at target 1. At the bottom is my risk level. 8.33 is my risk. Now, In the very middle is your risk reward ratio. And right here we have it at about a 2 to 1. Why? I'm risking 8% to make 16. That's about a 2 to 1. So right here it says risk reward ratio is a 2. Everyone get that right in the middle. So you have valuable information here. And then of course, at other targets, you'd have to change this. Like if I have multiple targets, then you just would move it up to get that information, whatever you want to do. And here now that risk reward has changed to 3.36, which is awesome. Over 3. And the second target gain is 28%. So that gives you an example of how to use the long. And the same thing works for the short. Now, let's say I don't want that. So let me get rid of some of this and move on to the next 5 year. We don't want that. All right. We have the hourly chart. Let's go to the daily. All right. We have the daily chart set here. And let's say I don't want to put a long or short position, but I want to get some measurements. Well, let me go back in here. So that's all I use there. Long, short, long, short. That's it. That's all I use. So let's go down to the next one. I mean, I don't use any of this stuff. I mean, I think I probably have once or twice, but that's just icons and silly, stupid stuff. However, this next one has the ruler. I like this tool because if I want information without posting longs or shorts, I can grab this. And let's say I want to see from here to here. All of a sudden, just using the measurement tool, it's telling me, look at that bar there, right here. It's telling me how many days, your time length. So it's telling me that's 55 days, and that's a 75% return. So you see how I'm able to, instead of doing long or short, but I want to measure, how long is that? How big is that? It's as simple as grabbing that ruler and dragging it. And that's up, and it'll do the same down. So down you get that nice red. So let's do from, so you got to put it at your starting point. Hold on one second. So you grab your ruler, you go to the starting point, left click, and then you drag it. So from here to here, that is a 23-day move, and that is a 30% drop. See how I got that information? Just with that nice ruler tool. So I use that all the time. I use it a lot. Now, let's say you have a whole bunch of, let's do this. Yeah, let's just start throwing things up here. I mean, you just went nuts with this, and you're like, wait, I got a lot on here, and for right now, I need to get some of this off real quick, or I just want to see this chart without it. Then you come down to this eyeball and click it, and everything will disappear. All right, so I can be like, okay, let me just look at this again. Sometimes my charts get really busy. Now, most of you know I have multiple views. Like for Bitcoin, I have like 5 or 6 charts. Some are really noisy. Noisy meaning I have a lot of lines and a lot of areas drawn in them. That's for me. That's what I like. And then some are less noisy so that when I zoom out or I have a different perspective or different viewpoint, there's less stuff on the chart. But sometimes, man, you just got to come over here and hit that button. Now, that button will temporarily hide everything from on the screen that you've got up there. So you can be like, hey, I'm overwhelmed. Let me just back up and look at this again. Okay, and then put them all back on there. So you just click it back. Boom, everything shows back up on your chart. So that's it. Very simple. That's left side stuff. I know this video is literally going forever and ever. All right. This video has gone on forever, so that's it for today. Tomorrow we're going to come over here. I'm going to cover the entire right side and add anything else I forgot. I meant to get all of this in one video, but I didn't. So tomorrow we're going to go over the very important right side and watch lists and all that kind of things, and the top as well over here, because this is just, I have literally been talking forever. So we'll do session 2 probably tomorrow. Love you guys. I hope you guys enjoyed this. Like I said, I'm not trying to insult your intelligence, but I do realize a lot of people don't know how to use TradingView, and it's not complicated. It's very easy. But the best thing to do is get on there and just start playing around with this stuff. But do not go too far. Don't get too technical. Don't start throwing a lot of things up there. All right. Love y'all.